Assalamualaikum and hello everyone. My name is Azmiatul Adawiyah binti Azmi and metric number 2025422408. Today, I will presenting our group assignment for financial market and banking services. For this assignment, our group has selected Ambank Group for analysis. We will be discussing the bank's performance, particularly in terms of its loans activities, liabilities management, and capital management. Before we begin, I would like to introduce my group members. So, we have Ainur Farhana, Intan Sofia, Nur Aida, and Khair Nabila. Okay, let's have a quick look at what we'll be covering in this presentation. In this assignment, we will start with an introduction to Ambank Group, followed by an overview of its product and services, evaluate the bank's financial performance, and conclusion. Now, let's move on to the introduction of Ambank Group. Ambank Group is one of the leading financial services group in Malaysia and have more than 50 years of experience in the banking industry. The group serves over 3 million customers nationwide through its branch, network and digital banking platform. Guided by its purpose, winning together, Ambank aims to help individuals and businesses grow and achieve success together. Before becoming one of the bank group in Malaysia, Ambank started as merchant bank and continued to grow over the years. Ambank Group was established in 1975 as Arab Malaysian Merchant Bank. A major turning point came in 1982 when the Tan Sri Azman Hashim acquired the bank and played an important role in its growth and development. In 1988, Ambank became the first merchant bank in Malaysia to be listed on the stock exchange. As the business continued to grow, the group changed the name to Ambank Group in 2002. Later, in 2006, Ambank Islamic was established to provide Sharia-compliant banking products and services. Today, Ambank is recognized as one of the top 6 banking groups in Malaysia. Ambank Group operates through several main business segments. This includes wholesale banking, business banking, retail banking, investment banking, and Islamic banking. The group also provides life insurance and family takaful service to meet different customer needs. This segment helps Ambank serve individuals, small and medium enterprise, as well as large corporation and institutional clients. Moving on to the key financial indicators, as at March 2025, Ambank recorded total asset of 199 billion, shareholders' equity of 20.6 billion, and a market capitalization of 18.5 billion. These figures show that Ambank has a strong financial position in the Malaysian banking industry.
Next, I would like to give a brief overview of Ambank product and services. Ambank offers a wide range of financial products to meet the needs of individual and business customers. For deposit product, Ambank provides current account, fixed deposit account, and foreign currency account. Under loan and financing, customer can apply for personal financing, home financing, auto financing, and SME financing. The bank also offers card services such as credit card, debit card, and corporate card. In addition, Ambank provides wealth management products including unit trust, bonds or sukuk, dual currency investment, and equity. For customers seeking protection, Ambank offers insurance and takaful plans. Besides that, Ambank also provides Islamic banking products such as Islamic deposit, Islamic financing, and Islamic investment account. In terms of services, Ambank offers banking services, digital banking services, investment and advisory services, business and corporate services, as well as customer support services. Overall, Ambank provides comprehensive financial solutions for both individuals and businesses.
While Ambank offers a wide range of retail, business, investment, and Islamic banking services, digital technology has changed how these services are delivered and used. Hi, my name is Khair Nabila binti Muhammad Khairullah, metric number 2025241192. Customers are now increasingly relying on digital banking because it is faster, more convenient, and easier to access compared to traditional banking method. So, digitization plays an important role in shaping customer behavior, improving banking operation, and transforming the financial sector. The first one is customer behavior. Digitization has significantly changed customer behavior in the banking sector by transforming how customers interact with banks. Today, customers prefer digital banking because it is faster, more convenient, and accessible anytime through online and mobile platforms. According to Ambank's annual report, the bank continues to utilize artificial intelligence, analytics, and automation to enhance customer experience and modernize their services. As a result, customers increasingly rely on digital banking for activities such as fund transfer, bill payment, and account monitoring without having to visit physical branches. This shift has also raised customer expectation for faster, more personalized, and real-time banking services. Therefore, banks must continuously improve their digital capabilities to remain competitive and meet evolving customer needs. The second one is banking operation. Digitization has also improved Ambank's banking operation by increasing efficiency and reducing reliance on manual processes. Through the use of artificial intelligence, analytics, and automation, many traditional banking activities can now be completed faster, more accurately, and with fewer errors. Data analytics also help Ambank improve their decision-making, strengthen risk management, and gain better instinct into customer needs. In addition, automation allows employees to focus on higher value tasks such as customer service, financial advisory, and business development, which contribute to greater productivity. Digital technology also help reduce operational costs by minimizing paperwork and repetitive administrative work. The third one is overall financial landscape. Beyond Ambank, digitization has transformed the overall financial landscape by increasing competition and encouraging innovation within the banking industry. Financial institutions are continuously investing in digital technology to develop more efficient, accessible, and customer-focused services. Digitization has also improved financial inclusion through digital banking platform and e-wallet services, making financial services more wider to a huge population. At the same time, the growth of fintech company has intensified competition, encouraging traditional banks and accelerate their digital transformation efforts. However, as the financial sector becomes increasingly digital, cybersecurity, data privacy, and regulatory compliance have become increasingly important. Therefore, banks must continue investing in technology and security to maintain customer trust and remain competitive in a rapidly evolving financial environment. Digitization is transforming banking into a faster, smarter, and more customer-centric industry. So let's move to the next slide. Now, I will present the financial ratio analysis for Ambank's group. There is 4 categories of ratio that we analyze, which is profitability ratio, liquidity ratio, asset quality ratio, and management soundness ratio. For my part, I will focus on profitability ratio, which start with return on asset, ROA. Based on our calculation, Ambank's ROA increased from 0.96% in 2024 to 1.01% in 2025. This means that the bank was able to generate more profit from their asset compared to the previous year. Ambank Group recorded higher net income and operating profit during the financial year. Ambank also continue to strengthen their digital banking services and technology capabilities, improving customer accessibility and operational efficiency. This improvement helped the bank make better use of their assets and contribute to increase in ROA.
Next, I will continue about return on equity. Return on equity or ROE measures how effectively the bank generates return from shareholders' equity. Based on our analysis, ROE decreased from 9.74% in 2024 to 9.71% in 2025. Although Ambank recorded high profit in 2025, shareholder equity also increased due to retained earning and other comprehensive income, meaning more profit were kept within the bank. As the equity base expanded, the return generated for each ringgit of equity became lower. In other words, equity grew faster than profit, which caused the ROE to decrease. Even so, the ratio remained close to the previous year's level, showing that Ambank continued to deliver stable returns while maintaining a stronger capital position. That is all for.
Next, I'm Anu Farhana. I will present the net interest margin or NIM ratio under the profitability ratio analysis of Ambank Holdings Berhad. As you can see from the chart, NIM ratio increased from 1.19% in 2034 to 1.29% in 2035, showing an improvement in the bank profitability. This increase happened because interest income increased while interest expenses decreased. As a result, the bank earned higher net interest income from its lending and investment activities. In addition, loans, advances, and financings increased in 2035, which means the bank was able to utilize earning assets more effectively to generate income. The higher NIM ratio indicates better control over funding costs, as the bank earned more from its interest-bearing assets while paying less on deposit and borrowings. In conclusion, Ambank Holdings Berhad performed better in 2035 compared to 2024.
For the liquidity part of our analysis, we focus on 3 ratios, which is loans to total deposit ratio, loans to total asset ratio, and liquidity coverage ratio. I will go with the loans to total deposit ratio. So, loans to total deposit ratio or LDR measures the proportion of bank's loans compared to its customer deposit. It shows how much of the deposit are being used to support lending activities. In 2025, the Ambank's LDR increased from 94.21% to 98.12%. This happened because loan increased by 3.5%, while customer deposit decreased slightly by 0.6%. From the annual report, Ambank mentioned that loan growth was supported by different business segments, meaning their lending activities were still expanding during the year. At the same time, the bank also focused on improving its funding mix and looking for the funding sources to manage costs. Even though it increased, the ratio is still below 100%, which means the bank still has enough deposit to support its loans and maintain a stable liquidity position.
Next, I will explain the loan to total asset ratio. This ratio measures the proportion of a bank total asset that are allocated to loan and financing activity. In 2024, Ambank recorded a loan to total asset ratio of 68.70%. The ratio increased to 69.77% in 2025. This increase indicates that Ambank allocated a larger portion of its asset to lending activity during the year. The growth was mainly driven by the increase in loan, advance, and financing activity, which grew faster than total asset. A higher ratio generally suggests that the bank is focusing on expanding its lending operation to generate more income and improve profitability. However, it also means the bank faces higher credit risk because borrowers may fail to repay their loans. Therefore, effective credit risk management is important to ensure the quality of the loan portfolio and maintain long-term financial stability. For the liquidity coverage ratio, the liquidity coverage ratio measures a bank's ability to meet its short-term financial obligation using high-quality liquid asset. In 2024, Ambank LCR was 150.3% and the ratio increased slightly to 151.6% in 2025. This improvement showed that Ambank maintained a strong liquidity position and had sufficient liquid asset to cover potential cash outflow. The increase was supported by effective liquidity management and continued growth in customer time deposits, which provide a stable source of funding. Importantly, both ratios were well above the regulatory minimum requirement of 100%. This indicates that Ambank was financially prepared to withstand short-term liquidity stress and maintain stable operation.
Let's move on to the next ratio, which is asset quality ratio. The first one is non-performing loan ratio. This ratio measures the proportion of loans that are impaired compared to total net loans. A lower ratio indicates better asset quality and more effective credit risk management. Based on the table and the graph, the ratio decreased from 1.69% in 2024 to 1.55% in 2025. This shows a smaller proportion of loans became impaired, mainly due to stronger credit assessment and loan monitoring process. This is also consistent with the decrease of gross impaired loan ratio reported in Annual Report 2025. The gross impaired loan ratio decreased from 1.66% in 2024 to 1.54% in 2025. This reflects that Ambank maintained good performance and managed to enhance its bank loan portfolio. The second ratio is credit loss provision to total assets. This ratio measures the proportion of total assets allocated as provision for expected credit losses. A lower ratio indicates stronger asset quality and credit risk exposure. So based on the table and the graph, the ratio decreased from 1.03% to 0.88%, mainly due to the reduction of expected credit losses. In addition, this is also because of better repayment performance from the borrowers leads to lower expected credit losses. Overall, this reflects Ambank's stronger performance in financial management. The last ratio is credit loss coverage ratio. This ratio evaluates the bank's ability to cover non-performing loan using credit loss provisions. A higher ratio indicates stronger protections against potential loan defaults. Based on the table and the graph, the ratio decreased from 90.70% in 2024 to 82.22% in 2025, but still in stable performance. This is mainly due to the reduction of expected credit losses and decrease in non-performing loan, reducing the needs for excessively high provisions. Even though the ratio decreased, Ambank still maintained its great performance and managed to provide sufficient provisions to cover impaired loans.
Next, management sounder ratio. As shown in the chart, the management sounder ratio Ambank Hodis Berhad recorded a lower in 2035, which is 44.59% compared to 2024, which is 44.65%. Management soundness ratio decreased because the bank generates higher operating income relative to its operating costs. It's allowing the bank to control its costs more efficiently. The lower management soundness is more better because the bank spends less to generate its ringgit of income. The improvement shows that the bank managed its operating activities more effectively in 2035, leading to better management efficiency. In conclusion, 2025 was a better financial year for Ambank Holdings Berhad compared to 2024. The bank shows stronger profitability ratio as reflected by the higher ROA and NIM ratio. Is better use of asset and improved earning. Liquidity ratio also remains strong with a higher loans to total deposit ratio, loans to total asset ratio, and liquidity coverage ratio, supported by growth in loans and financing activities. In terms of asset quality ratio, the bank performed better with a lower non-performing loan ratio and lower credit loss provision to total asset ratio, showing improved credit risk management. Although the credit loss coverage ratio decreased slightly due to lower credit loss provisions. The management soundness ratio was lower in 2025, which means the bank spent less to generate each ringgit of income and manage its operating costs more efficiently. Overall, Ambank Holdings Berhad demonstrated stronger profitability, liquidity, and better efficiency and improved risk management.
Okay, that's all from us. Thank you for watching.